Hello everyone, welcome back. I'm Frankie from Markets For You, and it's time for our Instrument of the Month video. This June, we're focusing on some key stocks to watch amid significant economic events and earnings reports that are scheduled. Let's dive in and see what's happening this month. If you can see my screen, you'll notice a few notable earnings reports from companies like Oracle and Broadcom. Although it's not a particularly heavy month for stocks, it's crucial to keep an eye on important events, including earnings from HP, Oracle, and Adobe. These reports will be released this week, with some companies announcing aftermarket and others before the market opens. However, stocks might not be the highlight this month, as there are critical economic events we need to focus to, particularly the interest rate announcements from various central banks. The Bank of Canada will announce its decision on June 5th, followed by the European Central Bank on June 6th. The Federal Reserve will make its rate decision on June 12th, and the Bank of Japan will follow, tentatively on June 14th. Later in the month, we will hear from the Swiss National Bank, the Reserve Bank of Australia, and the Bank of England. Although no major central bank announcements are planned for the fourth week, there's still essential data to monitor. We will see employment data from the US and Canada in the first week, followed by US inflation data, including the Consumer Price Index and Producer Price Index, along with retail sales data in the second week. The third week will bring UK inflation and PMI data from the Eurozone, UK, and US. Finally, the fourth week will highlight GDP data from the US and Canada, along with the US Core Personal Consumption Expenditures Price Index, an important measure of inflation. Each week presents different opportunities for currency pairs, especially significant given the inflation data and the Federal Reserve meeting in the second week. We will see how these events might impact the US dollar, especially with potential interest rate cuts on the horizon. Although no central banks have cut their rates as of the creation of this video, the landscape could change based on recent low US inflation figures, which might influence the Fed's decision-making. For this month, I recommend focusing on USD currency pairs. Specifically, it might affect the euro to US dollar and pound sterling to US dollar pairs, impacted by announcements from the European Central Bank and the Bank of England. I will also provide a technical analysis to demonstrate potential movements in the US dollar over the long term. Now, let's move on to the technical analysis. Okay, now we are in the technical analysis session. Today, we're diving into the USD index, and I'll be using the monthly chart to outline what we can expect in the coming weeks. Let's start by examining the chart here. You can see the shapes I'm drawing. These highlight the movements of the USD index over the past few months, specifically from November 2022 until now. The index initially showed consolidation at lower levels before it attempted to break out, only to fall back within a wider consolidation range. The support levels we're observing range from around 99.0, which was the lowest in July, to about 100.20 to 100.30. On the resistance side, the highest we've seen was in October 2023, around 106.70 to 106.90. Switching over to the weekly chart, the USD index continues within this consolidation range. From July 2023 to present, it's been fluctuating, creating a pattern of ups and downs, which is clearer here on the weekly chart. Given this pattern, I expect the index to continue consolidating in the first and second weeks of this month. The outcome of the Fed's decision will significantly impact whether the index tests the higher resistance or dips to lower support levels. Now, looking at the stochastic indicators, there's an interesting divergence. On the weekly chart, the stochastic is trending downwards towards the oversold territory, suggesting a potential short-term decline. However, the monthly stochastic points upwards, indicating possible long-term gains. So, what does this mean for the coming weeks? Based on the daily and weekly charts below the 20-period moving average, the USD is likely to edge lower initially. However, following the Federal Reserve's decision next week, I anticipate a rebound, though it will likely remain within the established consolidation range. For traders, this month's strategy should focus on risk management. Always set limits on your trades, particularly if you're not planning on holding positions long-term. Observing the daily fluctuations, the USD might struggle to break higher resistance levels before potentially declining. In conclusion, expect the USD to consolidate initially before determining its direction. Keep an eye on these patterns and prepare for shifts around key economic announcements. That wraps up our analysis for this month's Instrument of the Message. Stay tuned for more updates and trade safely. See you in the next video.